Welcome back to All Things Money. In this segment, we're going to be taking a few questions from our viewers and listeners. The first question concerns what's called fair value. A listener out there is an avid watcher of CNBC, and the hosts often give an update on what they call fair value, and the client wanted to know what that is. First of all, I have nothing against CNBC, but don't watch too much of that. It leads to various emotional roller coaster. Number one is not that much financial value on it. But anyway, so fair value is quoted on CNBC. What they're talking about is a relationship between the futures contract on one of the major indices, such as the S&P 500 or the Dow, as related to the actual value of those indexes. And the futures market generally trades around the clock in different countries, and so it's always trading, whereas the actual indexes in the United States trade between 9:30 a.m. and 4 o'clock p.m. And so overnight, as things happen in the world or the economy, the futures value can diverge from what the value of the actual index was the prior day. And so, well, let's back up for a minute. Let's talk once again about what is an index. Let's take the S&P 500 index, which focuses on large United States headquartered company. Takes about the 500 largest companies in the United States and puts them into an index. It excludes any real estate trust companies, excludes limited partnerships, doesn't include, it used to include Canadian companies. It has no Canadian companies in it, so it's just U.S. large company. And it's designed to track the value of the U.S. stock market as related to large companies. And so as those companies go up in value, the index goes up in value. So back to the futures contract. So what a futures contract is they're traded on the Chicago Mercantile Exchange, and you can essentially place a bet on whether the index is going to go higher or lower. And although it sounds a little bit like Las Vegas, there actually are some very useful reasons for the futures market. Let's say that you have you get a large lump sum of money and you're going to invest it in some companies, but you haven't had a chance to do your research yet, and you're not quite ready to make investments, but you think the market is going to go up significantly in the next several months. Well, you could buy a futures contract that would allow you to participate in the upside of the market while you kind of figured out what you actually wanted to purchase. And so there are valid reasons for it, but it is essentially a bet on the market going up or down in the future. And so when they talk about fair value, let's say that the S&P 500 closed yesterday at 1,000. And overnight, the futures market, there's some very positive news or something like that. And at 7:30 in the morning, when you turn on CNBC, in the futures market, the S&P 500 is trading at 1,050. That means that the fair value is trading 50 points above where the index closed the prior day. And so what you can infer from this, and it doesn't always work out this way, but essentially at the opening of the market at 9:30, you would expect that the market would go up to meet that fair value price set by the futures market of $1,050. So that's the concept of fair value. Once again, I encourage you, it does not always work this way. Some days the fair value will be above, the futures market will be above fair value, and the market will open up and immediately go down. But it can give you somewhat of an indication of where the market may be heading for the day. The second question we have is from Robert in Fairfield Harbor, who wanted to know if it's worthwhile to take advantage of the tax deduction for a home office. He's afraid of triggering an audit. And I run into this a lot. Some tax advisors out there advise their clients, believe it or not to take a deduction that they are allowed to because they're afraid of triggering an audit. Well, even if you do trigger an audit, the only people that have anything to worry about are the people that are cheating. And we certainly don't advocate anyone cheating on your taxes. The key to tax compliance is documentation. if you're documenting your deductions sufficiently, the IRS generally has no problem. I've dealt with the IRS for years and years, and contrary to what you may hear, the majority of the auditors are very easy to deal with. You can request a different auditor if you don't like the one that you get. The second thing is that the prospect of an IRS agent coming to your home or business and sitting down and auditing your books is extremely minuscule. 98% of the audits are actually done by paper. The majority of the audits are actually a matching type audit where you have failed to report something that was reported to the IRS, say on a 1099 or a 1098. Sometimes they will ask you to send them documentation for a certain deduction. But you should never be afraid to take a deduction that you're legitimately allowed to. That's just ridiculous. The tax code was written for you to take advantage of it. If they didn't want you to take advantage of a home office, they wouldn't have put it in the tax code. Now, having said all that, the home office is one area that gets a fair amount of abuse, and so you want to make sure that you have your information correct. And one of the things that I find very useful for a home office is take a picture of it. If you have a legitimate home office with your desk and your bookshelves and your computer, and that is where you run your small business from, take a picture of it and throw it in the file. Have a sketch of your house where it shows the square footage of your home office as compared to the rest of your house. Those are some little tips. You may even want to go so far as to make a log of the time you spend in your home office. And if you do get audited and you sit down and you say, look, here's a picture of my home office, here's a log of when I use my home office, and here's the square footage of my house, that IRS auditor is going to leave you alone. It's the people that you come in and they say, well, I have no records. My dog ate it. It got blown in the fireplace or whatever. There's so many of those stories out there that the IRS agents run into, that if you're well organized, documented, they're going to leave you alone. In fact, and then some of the other audit strategies are don't argue on the little things. If they want to deny a $5 deduction on because you put $5 in the church plate and you don't have a receipt, don't argue with them. If it's something big and you have a legitimate position, certainly take that position. So don't be afraid to take those deductions that you're entitled to. Well, I hope you've enjoyed today's show and that you'll join us. If you have any questions, please email us at allthingsmoney@dlblain.com or call us at 633-0107. For All Things Money, this is David Blain, and we'll see you next week.
The proceeding was a paid program. The opinions expressed are not necessarily those of WNBU and Inner Banks Media.